Good day, traders. Stacey Burke from Stacey Burke Trading, Wednesday, June 3rd. Daily currency levels for the British pound crosses. Looking at our economic calendar today, we have final services PMI at 4:30 a.m. New York Eastern Standard Time. G7 meetings going on today. And tomorrow morning, 8:15 a.m. New York Eastern Standard Time, we have the ADP non-farm employment. At 10 a.m., we have the Bank of Canada rate statement, and also at 10 a.m., the ISM non-manufacturing PMI. So there's a bit of data coming out today. Looking at our pound Aussie, first up, big move down yesterday, hitting stops from back in August and September, taking out monthly lows. We still have profitable gaps sitting down from September at the 79,58,000 area. When we zoom in, we can see that this market continues to make new lows, and it's also had a bit of a possible blow off in a 1, 2, 3. We could see this market continue to extend down. When we look at our 4-hour chart, we saw the pin hammer yesterday, and then the big move down yesterday, dropping almost over 250 pips. Currently pulling back in that last 4-hour window and going sideways at the 81.50 level. Just again, if we squeeze this chart up, we've got stops down at the 8,000 level from back in September, and that 000 level may prove to be significant. When we look at our 15-minute chart, we can see that move down yesterday. They took out the previous stops up at that 84.50 level before reversing and then hitting the previous day's low, trending down, and then moving down another 150 pips this morning in the early Asia session, pulling back, currently trading sideways in a 25 pip box as we head into the close of Asia. We have stops from short traders prior to that Asian 12 candle window, and of course traders who have gone long off the break of the doji at that 8100 level. We could see this market come down to hit traders who are long before reversing back up. Possibly if this market starts to head higher, we could see a retest of the lows today and an extension of this range. Next up is our pound Canadian. Again, on our daily chart, we see the market is still traded in a fairly tight range the last few days, just underneath of the 7,000 level. We have stops below the low of last week at 68.48 and stops above the highs of Friday at 69.50. Currently, this 7,000 is still proving to be a fairly significant level for the market. And again, if we were to break lower or higher, we have room to either side of these 250 pip boxes to move to. When we look at our 4-hour chart, we can see again the market traded off that 7,000 level. We have stops below earlier in the week at 6,900. And again, that 7,000 level, the market seems to be just poised and consolidating there. If we saw a break higher, obviously we could move right through the previous week's highs. But if this market does have a bit of a rollover, we can retest the lows of last week, and that would take us down another 150 plus pips. Looking at our 15-minute chart, again, we can see the market has pushed up towards yesterday's highs, just underneath of that 7,000 level before pulling back. Still inside of a trading range between 70.25 basically and 69.25. But again, still inside of yesterday's range and fairly tight market of about 175 to 100 pips up and down. Looking at our pound Swiss, looking at our daily chart first, we can see this market had one push, two pushes, and then a 1, 2, 3 today, hitting stops from the beginning of last month. We still have more stops at the highs of April, up around the 2200 level. So even though this market has extended out, there's nothing to say that it can't continue its move and go higher. When we look at our 4-hour chart, we see that big, strong, explosive move that continued yesterday, hitting stops from back in May, and also now currently testing the highs of the first week of May up at 2120. And again, there are stops above there at the 2200 level. And again, even though this market has extended out, there's nothing to say this market cannot keep going. When we look at our 15-minute chart, we can see that yesterday's high has been broken. The market's pulled back and consolidated in this second 3-hour window of Asia. We may see a bit of a pullback and a retest of the lows, and then a retest of the high again. As we mentioned, if we just tighten this chart up, we have a fairly strong trend that is still intact. And again, no evidence of this reversing. Not to say that we can't get a trendline break and a retest, but there are stops still 100 pips above us from the previous month's highs. And again, no real evidence of a reversal. Even though we've had 3 solid days of rise, this market has not given us an indication of a reversal just yet. Looking at our pound yen, again, very similar to the pound Swiss, 1 push, 2 push, and then a 1, 2, 3, taking out stops. There are stops above highs from back in March that still have not been hit. And again, a similar scenario, even though the market looks like it's can't go any higher, this market could certainly surprise us and still have another day of straight up movement. So I just wouldn't be too keen on counter trending that just yet. That's a very, very strong, explosive move. And again, when a market gets like this, people say, well, how do you get in? Well, often you just wait. You wait for the market to either pull back or go into consolidation. But definitely you don't need to chase it or try and counter trend it. When we look at our 15-minute chart, yesterday, again, another example of a breakout pullback continuation. Pullback again in London, breakout continuation in the U.S. A very strong move yesterday upwards. And again, a break to new highs this morning before pulling back and retesting that, but we're still sitting currently on top of yesterday's highs. And similar to this pound Swiss, we still have a very strong trend line intact. And this market hasn't blown off vertically, and we haven't had a pullback yet either for a reversal. So again, just probably sticking with the trend, buying low. Looking at the pound New Zealand, again, we continued our move down, hitting stops into that lower 250 pip box. Still have monthly lows from January that are down at the 95.40 level, currently trading at 96.20, so that's 180 pips away still. And this market has not given us an indication of a reversal just yet. When we look at our 4-hour chart, again, another example of where the market may look like it's overextended, but there's certainly not a reason why it cannot continue to move down. So just be cautious if you're counter trending this market. Again, just want to make sure that you're not trying to catch a falling knife. Looking at our 15-minute chart, we can see again that similar to the pound Aussie, consolidation into the close before dropping down another 100 pips. Now we've gone sideways, and market possibly may retest the low and give us a reversal for a stop hunt high. But again, this market right now, currently, we could still have another full day of downward movement. So if there are long positions in this market, you'd want to keep a tight stop. We have stops above the high of the day and the low of the day, and the redrawn high of the day from the last hour of Asia. And again, just heading into the Europe Open. Looking at our pound USD, again, looking at our daily chart first, similar to the pound yen and pound Swiss. 1 push, 2 push, and then an explosive 1, 2, 3. We still have stops intact, again, above the highs of April at 26.42. We're currently trading at 25.82, so again, very similar to this market. To, even though it's had a fairly strong move straight up, there's nothing to say that that move cannot continue. On our 4-hour, we can see that market again, 1 push, 2 push the last few weeks, and then exploding out at the beginning of the week, and still moving very strongly with a micro trend line intact towards those highs. And looking at our 15-minute chart, similar, very strong intact trend line, no evidence of a trend line break yet. And again, a breakout of yesterday's highs. Pull back, we could see a stop hunt low for a continuation back through the highs of the day. If the market was to stop hunt low, we could get a break of the trend line in the London session and then a retest coming back up. So again, just not necessarily looking to buy low without a strong indication of that market giving us an entry. And if that market does continue back through the highs, we still have at least a 60 pip range to the previous month's highs. Closing on a quote from Curtis Faith, one of the original Turtles. Trade with an edge, manage your risk, be consistent, and keep it simple. I think that basically sums up our 12 candle 50 pip system traders, very similar to the Turtle approach. We trade in both directions. We wait for the stop hunt. We wait for the market to go into consolidation, even if it's a 2-bar consolidation, an engulfment or a trend trade. Keep it simple, 1-bar stop, 4 or 5 times ATR in terms of risk reward. And we look for our 50 pip targets. And sometimes, as we've seen in the last few days, if you're in a range expansion of a measured move, these can be 50, 100, 150 pip moves. So have a great trading session. Keep it simple. Focus on risk management. And may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.